Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Kicking into March 1st, folks. You have to like it. Yesterday's gone. Tomorrow's not here. What are you doing right now? Miracles happen to those who believe in them. Bernard Berenson. Market-wise, let's take a look at it out here. We had the Dow Industrials up 350, NASDAQ up 131, S&P's up 47, gold contract down $2, trading at $1,232 an ounce. Silver off 4 cents at $14.85 an ounce. Platinum up $3 at $9.37 an ounce. Copper up a penny and a half at $2.14 a pound. Light sweet crude up 60 cents, trading at $34.34 a barrel. Bonds got toasted and roasted. You had the 10-year note down 28 ticks, 129.20. The 30-year bond off 2 full points, 162.16. Both came down with real juice. King dollar up 136 ticks, 98.35. The euro is down 6 at 108, and the yen is trading at 113.91. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Deviant market. It's a deviant market. It's a beautiful thing, folks. So, we did 136 million shares today. And guess what, folks? That means that you took the swing out with volume. And the volume came in fast and furious right at the end. There was 136 million you're looking for. And that swing point we're talking about is 194.58. The SPY's up 450 today. It had tried it twice, couldn't handle it. Yesterday it backed down with lighter volume. Guess what? To do what? To get more strength, to get up into it and over it. Now, so what that sets up is this. There's two different ways that you can look at the context for a price projection. You know, my price projection was the low of December 18th. The reason being that's the last time with volume on the way down when the market croaked. So that's 199.83. That was the price projection when we're coming off the bottom. Now, because we just took this out in volume, you can take the high of that swing point, which is 194.58, and then you take the low, which is 181. Now, this is where it gets really wild. So if we take it that way, what you're going to have is that you're going to have 13 points. You had 13 points. Now, this is where it's getting really wild. You had 13 points to 191, and what do you got? You get 204, right? Well, this is where it's going to get wild because 199 is the bottom of the 18th. The next swing point up here is 207. The gap is 203.87. So what I expect you're going to actually see is that this baby now is going to go for that gap, which is a beautiful thing, folks. Because, see, what you have is this. You took out a minor swing with volume today. You're still going up with lighter volume compared to the way down. So the bottom line is that that's going to be the short position up at that level. And as I had said on the way down, something had to get this market bullish again, so the bulls would really get bulls. The bears would get scared to death to short it. That's just how markets go. The Qs. What do you have with the Qs? Qs have done 37 million shares today. You're up 328. You're over the swing point of 104.80, and you have volume. So you took the minus swing point out again with volume. What does that set up? You take the top of that, you know, if we take December 18th first, the price projection was 109.83. That's one way of doing it. Second way of doing it, you can take the top of that price projection. Where we took out today is 104.80. Now, I'm not going to take down to the bottom spike. The reason being is that if you stay conservative, what you'd want to do is that you take the bottom of January 20th. So that's 97 to 104. That gives you $7. You take 7 into 104, that gives you 111. Guess what? 111 ends up, that's so weird, man. 111 ends up being in that gap, too. We're going to that gap. Now, that being said, that's almost too easy, too. So what you got to recognize is that I suspect we're going to be up there. You know, you take it from there and you figure out where you're going to set your trade up and I'm not suggesting that if you're not a trader to go short up at those markets. What I absolutely am suggesting, folks, is that we take a look at this S&P. I'm going to bring this S&P back, okay? Because if I've found out anything in the past years, that the market always gives you a shot to get out 2 or 3 times before this market croaks. And what has happened is this. The first get-go down was last August. You know, August, we came down, and you came down so fast and hard, folks. You went from 2,100 down to 1,800. You came all the way back up. You got back up to 2,100 again. We came all the way back down to 1,800 again, 1,810. Guess what? Here's your third shot. All you have to do, if you don't believe it, put a stop in. That's it. Just put a stop in. You know, bottom line, you don't want to be 3 months from now saying, why didn't I put a stop in? You don't want to be into October, you know, saying, okay, we have a market that's down in an incredible amount. Why didn't I do it when I had this many chances? Gold contract. What do we have with gold? What you have with gold is this. Because my take, folks, is that this is still a B2C of a much larger ABC structure on the way down. Gold. Gold's trading at 1231. We did 210,000 contracts today. Really good contracts. Good volume. That gold contract right now, I suspect tomorrow it's going to probably get into 212, 10 at 1212. That being said, this thing does want to get up and over the 1263 area. You know, so we'll see how this ends up shaking out, how it does that test. Bonds, what you have with bonds, and this is what you want to wrap this correlation together. That correlation, the bond market come down hard today. Now, this is the third time in about 6 months that bonds have come down hard. What that says is that, number one, you know, they want to get lower. The 10-year right now is at 129.19. I expect you're going to get somewhere down to 128.21. And how we get down there is going to be a big deal. The reason being is that if, in fact, you get fall through tomorrow with volume, that's going to be like, okay, bonds would get a counter-trend bounce when we get lower, but they probably wouldn't go to another high. You know, we took apart a swing point today of the 129.26 in the 10-year, and we took it apart with conviction. What conviction means is wide price spread, accelerated volume. You go into the 30-year, same setup in the 30-year. 30-year came down 2 full points. You did 292,000 contracts, taking that baby apart. 30-year wants to run down to the 160 area. Right now, you're at 162.13. If you want to look at the yield out here, the yield in the 10-year is 1.8. So if you need mortgages, you need refinancing, all the above, go do it, and do it right now, folks. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials finished up 348. NASDAQ up 131. S&P's up 48. We're going to be right back.